Hello everyone, this is Brooke, DeFi analyst from TID Research, and then today I will talk about opportunities on the Plume chain. So Plume is an RWA chain, and the reason why I think the opportunities on Plume right now are especially interesting is because that the market right now seems to be a little bit quiet, and then we're in a volatile period of time when there's no major breakout from the major token price such as BTC and ETH, and therefore the funding rates are low, and therefore on-chain yield is like kind of dampened as well. And have been for even for the more degen assets, their native yield is staying like around 10%, and then there's not a lot of good yields going on for across different major DeFi markets. And the Plume, which is backed by RWA, means that their yield are actually not really correlated with the crypto market. So it means that during this kind of period, during this kind of volatile period of time for crypto market, RWA assets are therefore more attractive because it means that they can provide more visibility and predictability in terms of yield, and therefore make it easier for you to build loop on top. And on top of that, no need to worry about any liquidation risk of the online collateral, no need to worry about any systematic risk. And this quality is especially attractive after we're seeing all this recent drama regarding the popular yield-bearing stablecoins. It's not really like anything doing. It's not like anyone doing anything wrong with all these yield-bearing stablecoins. It's more like the people have concern about how they are managing their online collaterals, and this kind of concern, and it's reasonable, and it also incurs some kind of volatility, and also for their peg. If you are holding RWA-backed yield-bearing stable, you don't have to worry a lot about all these online collaterals because they are actually by established institution, and they are actually managed by established institution where you can actually verify in the real world. So that's the reason why I think opportunities right now on Plume are especially attractive. Also because these opportunities are not often talked about and overlooked by the most of the DeFi user. To farm on the Plume, first we need to be familiar with the pUSD. pUSD is the liquidity layer of the Plume. It's actually backed by USDC. So when you mint pUSD, just deposit USDC on Ethereum. This USDC will stay on Ethereum, and it will not be deployed to any fancy DeFi strategies. It will just be sitting in the boring as collateral for the pUSD on Plume network. When you mint, you'll receive the equivalent amount, one by one, equivalent amount of the pUSD on the Plume network. And with pUSD, you can participate in all kind of DeFi opportunities on the network. First and foremost, the Nest is the biggest yield aggregator and also the full protocol on Plume. You can see that the APY right now is actually the same level as those APY of the most popular yield-bearing stable that is backed by the leverage on-chain yield strategies, which is also earning around 10%. If you look at it, this is a Nest basis vote with a token called N basis. It's actually backed by 75% crypto, straightforward basis strategy, no leverage involved, and with 25% of the US Treasury. So the whole breakdown is very easy to understand. So there is no hidden risk, there is no systematic risk. You can easily understand and verify where this yield coming from. And that's the reason why 10%, even though it's not super high, but it's still a very attractive return, especially when everything is so transparent. And on top of that, people might be also interested in the Nest Alpha. So unlike the Nest basis, which is 75% of the crypto-based strategies, more of this reward is coming from the assets. For example, like the oil, gas contracts, or like private credits, US Treasury, ETF, so on and so forth. So all this blue chip asset contribute to the yield of the assets. And therefore, that's why the reason why we're saying that the asset on Plume network are the yield and also the performance are often less correlated with the broad crypto market. So that's the reason why this asset during this kind of period of time for a volatile period of time for the crypto market, this is why this kind of assets become less and less attractive, because it means that when the market is going down, this type of asset tend to hold up pretty good and they're still stable, printing high APY at around 10%. And if you're more familiar with the Maple Finance Series USDC, you can also find a similar product on Plume network. It's called the Nest Credit Float with a ticker of N credits. The APY is actually higher than the Series USDT because Series USDT and Series USDC are growing pretty fast right now, and the yield are actually pretty diluted. And then everyone been looping it on like Arbitrum for the drip reward or on Plasma for the XPO reward. So the native yield of the Series USDC or Series USDT right now is like around 6%. So you can see for the similar assets, which is made of private credit and also US Treasury, you get to earn 10% on Plume network. And that is not so. In addition to the native yield, you can also earn the reward. Plume right now is currently doing the season 2 of the incentive program to bootstrap the TVO, and they are working with the Merkle, which is the incentive distribution platform for similar to Merkle. So once you hold on to these assets, you can actually deposit them into Merkle, and then you'll be able to get some additional token incentives. So right now, only uncredited holder, when they deposit into the Merkle, can earn the reward. So in total, the reward is like more than 20%. But they'll roll out like different kind of reward campaigns from time to time. So probably like starting from next week or next month, it will be like an alpha or an basis. So all this reward, in addition to the native yield, they are also earning like additional incentives on top. And that is there's more about it. But there's also DeFi market available on Plume. So it means that for all the assets we're talking about, you can actually supply it here and then to borrow for additional liquidity, or you can also build a loop on top of this asset. So let's look at, for example, at M basis. So for M basis, the 38-day APY is like 10.7%. And then if you go to Morpho Plume network, if you supply M basis, the borrowing cost of the pUSD is only 4.81% for LLTV up to 91.5% with more than 4 million of the idle liquidity. So it means that if you supply and borrow, you are earning like around 5 to 6% per spread. And then you can open up to 10 to 12 times leverage. So that is like more than 50% of ROE. And then you can also do this for N alpha, or if you can even bridge the asset from other chain, for example, XUSD or MNEV. This is like more degen type of yield bearing stables. And still, you can earn like very high APY. So that is why I say that there are a lot of good opportunities, blue chip opportunities available on Plume, and then not a lot of people talk about it because of 6% per loop. That is very hard to find on, for example, Mainnet, Arbitrum, and the Plasma right now. And it makes this kind of opportunity very, very attractive for people who are more comfortable with leverage. But for people who are more like conservative, who are looking for better yield sustainability and then also the stability, this kind of asset, like which is earning like stably 10%, and with the assets less correlated from the crypto market, this kind of asset can also provide a very good adjusted return for this kind of users. Not to mention that these users can also deposit their token here, similar to staking, and then to earn additional reward on top. Overall, provide a lot of opportunities for different kind of users, and these opportunities are often overlooked by the most